Tom Halverson, great to have you with us again for another conversation about the economy. We wanted to use our time with you today to talk about an issue that you have been speaking about a lot over the last several months at CoBank industry conferences and other meetings, and that is the growing concern that we could potentially have a supply shortage of electricity in this country, driven by the explosive growth of artificial intelligence and data centers and some other factors as well.
Great, this is an exciting one, I can't wait.
This is an issue that obviously people who work in the electric industry are very focused on, also people in technology who use data centers for their operations. I'm not sure that the average American, though, is totally focused on this. Just from your perspective, how big of a deal is this issue, and how important is it that we figure out a solution to this in the coming period?
It would be hard to overstate how big of a deal it is. It's going to have immense impact on the productivity and health and well-being of our economy long into the future. So figuring out this issue, which I prefer to think not of as just as a challenge, but as a tremendous opportunity set for the American economy.
That's a great segue into our first slide here, which is a context-setting slide that shows the growth or lack of growth of electricity demand over the last couple of decades in the US. It's basically, we've had very little change in the overall consumption of power, even though the economy is bigger, even though there's more people. Just talk about the why of this. How is it that power consumption in the US has been so flat for the last couple of decades?
During this period, on this graph, the population of the United States has grown a lot, and the size of GDP of the United States economy has grown a lot. So why does it look like that? Well, the answer is a variety of things. We've gotten a lot more efficient. Think your home or office buildings, right? So we're just a lot more efficient in the machines we build. Think refrigerators and appliances and all of that kind of stuff. So the amount of power we need to produce or to run the stuff that we need to run has gone down because we've just been getting better at doing that. That's one thing. The other big macro piece of this story is that we've continued to migrate towards an ever-growing service economy. So the percentage of GDP, which is services as opposed to manufacturing, continues to increase. We're basically almost entirely a services economy. It's well north of 2/3 of the size of GDP. And what that means is the energy intensity per unit of GDP output in our economy has gone down, 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 down for decades, right? We can have a bigger and bigger economy with the same amount of electrons being used. So it's actually a good news story, but it has made the electric utility sector a rather staid place where there hasn't been any growth, really, let alone any dynamic growth. And that is a situation that is changing rapidly.
Let's bring up the next slide, which shows the forward projection of this into the future. And there's lots of different projections for electricity demand going forward. All of them show it going up and going up rapidly. How big of a change is that going to be for the country and for the utility sector, which has to deliver this power?
We can use a variety of words to describe it. We're at an inflection point in how this is evolving. Everyone agrees that it's going to look a lot different than the last 20 years, and that the curve is going to be upward sloping to the right. It's very exciting, but it's also a daunting set of issues to deal with to be able to make sure that we can realize the supply and the infrastructure that's going to be required to meet this upward sloping curve, no matter what its angle ultimately turns out to be.
Let's bring up a picture of a data center, and artificial intelligence, which is in the headlines all the time, requires data centers, and these are basically big buildings full of computer equipment and servers and things like that. Just for the people who don't know, why is it that these AI data centers are such power hogs? They just are ravenous consumers of electricity, and what's the reason for that?
There's a variety of reasons, but basically a data center is just a building in which you jam racks and racks and racks and racks of servers that are going to serve as repositories, and they're all running off electricity. and they're all getting hot, and you have to run power to cool the building off and keep it all cool. And the amount of power that you need to do an AI-assisted search as opposed to a good old-fashioned, Google search on the internet takes a lot more power. So as we've migrated to the cloud, people don't just have data centers, in their building anymore. They have to put all their data up in the cloud, which means ultimately it's sitting somewhere in a data center run by a third party. And these things are being built with great speed all over the place, and they need an enormous amount of power, and they need that power to be extremely reliable.
So that's the data center piece. There are, however, some other demand drivers that are out there. We'll bring up another chart that shows this. Manufacturing reshoring back into the US for a variety of reasons is one. Then you also have the EV, electric vehicle conversion trend. So it almost seems like this is like a perfect storm of things happening all at the same time that are contributing to these upward demand projections.
Well, what's happening is we're just adding more and more fuel to the proverbial fire, right? So 2 years ago, if we were having this conversation, we'd all been talking about the energy transition, how we're going to go from fossil-based fuels and we're going to migrate to renewable energy, and what does that mean for the coal fleet and all of that stuff. But now, 2 years later, the economy continues to be, booming, right? We are a monstrous, energy producer, the biggest energy producer in the world, right? Our cost structure and everything else means that we're having a boom in manufacturing. North America is doing great. The United States economy, despite sentiment among people, is doing better than almost anybody else in the world. And we're involved in this transition to electrification of the vehicle fleet, which, whatever speed it goes, certainly requires more electrons. And then you throw on top of that the whole of artificial intelligence and everything else. So what's happening is, it's just more, which means that the energy transition that we were talking about 2 years ago is still there, but it needs to be even more, even faster, even bigger, right? Because the curve for future electron demands is going to be even steeper than we thought a year ago or 2 years ago.
Let's kind of pivot over to the supply side. And the utility complex, the power complex in the U.S. is complex. It's got regional variation. And then you have investor-owned utilities in the cities. You have rural electric co-ops in rural areas. It's a complicated beast. How ready do you think on the supply side are we to handle this as of right now? Are we going to be able to meet the demand on the supply side?
The national grid, you say it as a national grid, but it's a whole bunch of regional grids, right? And regional markets. Each one has a different story with respect to how much power supply capacity it has, how much surge capacity it has, how much base load power it has, et cetera, and how well it is interconnected to other markets so that it can import or export to other regions, when they have surpluses or deficits. So it's a complicated story. But I would say largely, we already have a situation where the reserve margins aren't big enough in big parts of the country. And the future supply of electrons that are being spoken for or asked for by, fill in the blank, data center companies or the hyperscalers who are building these, predominantly building these data centers, we don't know where it's all going to come from. I think it's fair to say that we need all of the above, right? It means that everything that we thought we needed before, we still need, and we need more, and it puts a lot of pressure on that desire, that public policy desire to migrate through an energy transition to a more renewable power infrastructure gets delayed, right? Because in order to have enough power, for that power to be reliable, right? So it doesn't have huge fluctuations, and for it to be available at a reasonable price and cost effective for either businesses on the one hand or consumers on the other, whether they be rural or urban, is going to require that we use everything we've got. And it probably means that some of the coal-fired power plants that 2 years ago we thought we were going to shut down at a certain date are going to need to be used longer. And we're probably going to need to use more natural gas and build more fossil fuel natural gas powered power plants than we thought 2 years ago. And we're going to have to consider other options too. And there will need to be enormous investments in transmission infrastructure because, as you all know, where you generate and produce electrons is usually not where you need those electrons, and you got to move them from where you generate them to where they need to be consumed. So we're going to need a vast expansion of investment in the entirety of the electric grid and power complex in this country, not for the next couple of years, but for long into the future. And it is a daunting task to be sure, but it's also an enormous growth opportunity and economic value creation opportunity for the United States of America.
We'll bring up a headline here, recent headline from the Wall Street Journal about Microsoft recommissioning essentially the 3 Mile Island nuclear plant because they wanted reliable, clean, low carbon power for their AI data center activities. Is nuclear going to be a bigger part of the solution than maybe people would have thought a couple years ago?
Short answer is yes. To me, I think about this, the assets in the power complex, these are assets that cost a lot of money and they run for decades, right? And so it takes a long time to do what we're describing. So I think to myself, it's almost inconceivable to me that 20, 30, 40, 50 years from now, that when we need way, way more electrons to be produced and distributed to where they ultimately need to be consumed, it's inconceivable to me that will not be a meaningfully larger portion of that contributed by nuclear power. And the reason for that is, we don't have enough of everything else. And there's a conflict between our desire for more power and our desire to have an energy transition and not, burn so much fossil fuel in the future. And, there are clearly issues with, nuclear, the nuclear fuel cycle and security risks associated with that. And what do you do with spent fuel and how do you store it and have all the security associated with that? However, the fact that it's an unlimited supply of environmentally, friendly electricity generation is reawakened a great interest in the United States and other places, but particularly here, and particularly among the hyperscalers in the data center space, because they know that the needs they have are going to require an all of the above electricity strategy. And so they are backing things like this, because that's a plant that was closed down. One of the reactors, is just sitting there, and apparently they can reopen it and use it again. But there's billions and billions of dollars being invested in multiple different potential small modular nuclear reactor technologies, and market forces will work, and eventually one or two of those will be found to be safe, secure, financially sensible, and will be scaled up. And it'll take longer than everybody wants and thinks it should. But in 20, 30, 40 years, that's got to be a meaningful portion of the generation fleet, because we're going to need that much, and we're going to want the non-fossil fuel attributes of nuclear power. Not acknowledging that it will be a challenge to deal with the other ancillary impacts of nuclear in terms of the fuel cycle and storage of spent fuel and all that.
Final question for you. We finance at CoBank a lot of rural electric co-ops. We also finance data centers, so we're in the middle of a lot of this on the capital side. And you talk to lots of customers in both those industries. How much of this do you think, or will there be an increase? Do you think of demand for electricity from data centers and AI in rural areas specifically? Are rural electric co-ops in a position to capitalize on this opportunity if they want to?
Absolutely, there's no question. Many of our customers are well along in dialogue with the hyperscalers and others. Many are, the struggle is going to be, they want so much so fast. how does that demand get satisfied? Because the supply side of building stuff is challenged for basic infrastructure inputs, think transformers and poles and all that stuff. The hyperscaler wants the plant, they want 500 megawatts, in 12 to 18 months. Well, that's not going to happen, right? So there's challenges there, and then also going to be challenges of, well, who pays, how does it get financed, et cetera. So, power plants are generally located in rural places, not in urban places. So, rural America will be an epicenter of all of this activity, including the customers and the industries that we serve, and we happen to be a significant source of finance for the rural electric cooperative industry, but also other parts of the power complex. So we're very well positioned, and we have relationships all over the place, and we are exceptionally busy, and we believe we will be exceptionally busy serving our mission and serving our customers in this space as far into the future as we can see at the moment.